Welcome back. China's second quarter GDP growth rate fell short of expectations, with the economy growing by 4.7% year on year. This figure indicating a slower expansion compared to the previous quarter. Joining me now to unpack the data in greater detail is head of China strategy at Prescient, Tian Pan. Tian, thanks so much for your time today. Now listen, 4% isn't a bad number at all, but I guess expectations for China are higher. I mean, we would be very happy if we could get that kind of growth. But I guess what we're seeing here is a slowdown now from 5.2% in the fourth quarter of 2023 to 5.1% in the first quarter of 2024 and now 4.7%. How concerning is the slowdown?
Yeah, so it's definitely falling short of expectations. I think the consensus expectations were around 5.1% for the quarter. The drop is, or the missed expectation is not by a large margin, but it does show that China's economic recovery is losing momentum. So I think the concerning factors continues to be the property sector. That continues to be a drag on the economy, and then also weak consumer spending and consumer sentiment data. I think those are probably the two largest concerning data points that we are seeing now.
And you mentioned, the property sector, which has been the laggard for quite some time now. Recent data showing that housing prices fell at their fastest pace in 9 years in June. And in that GDP print, we also saw real estate investment falling 10%. Now, the outside looking in, it doesn't seem like we're nearing the end of that downbeat cycle. Being in the country, is there actually light at the end of the tunnel?
So yes, the property sector woes are continuing, and I think we need to understand that the property cycle, because it's a large fixed investment, the cycles are very, very long. We are already probably 5 years into the downturn cycle. I wouldn't be surprised if we have another 5 years of slow declines, and that's our expectation. But all of this is understood because everyone should understand that the property cycles are very long, and the decline is being managed. So we are seeing the central government and the policymakers release a lot of supportive policies, not to revive the entire property sector, but to help manage its decline into a more sustainable level. A quick example is that, for example, residents in Shanghai need to spend, as a family, more than 25 years of gross income to afford a very standard property. So as prices normalize, we'll see prices come down to a more affordable level, which will help other aspects of the economy. That's what we expect for probably the next 5 to 10 years.
So you mentioned stimulus there, and you also mentioned how long this property downturn cycle will be. Do you now expect to see even further stimulus from the Chinese government as we move ahead in 2024?
Yes, absolutely. We do expect further stimulus, but I think the expectation on the size of the stimulus varies quite widely. What we expect, especially for the property sector, is more sort of stimulus policies that are just enough to ensure that there's stability in the sector and in the industry, rather than revive it to be sort of one of the main growth engines that it has been for the past 2 decades. I think it is getting to unsustainable levels, and the policymakers understand that. So we don't expect the so-called bazooka-style stimulus coming through.
That has kind of tapered off since like early last year. I think towards the end of last year, we started seeing like smaller stimulus packages coming through into the economy. Now, last week, we also saw trade data out from China, exports growing, but imports declining last month due to lower domestic demand. Now, with the US tariffs on Chinese EVs and high tech coming into effect next month, and those European tariffs in effect on EV vehicles at the moment, how concerning is the picture playing out in the trade scene?
So I think firstly, on your point about US tariffs, I think as we run up into the US elections, I think the one consensus the Democrats and the Republicans have is that they are both anti-China, and China bashing in the run-up to US elections kind of wins you votes. So we see that as a lot of noise, election-related noise. what we are seeing is that there's absolutely close to zero official large quantities of imports of Chinese EVs into the US either way. So, for example, the 100% tariffs imposed on Chinese EVs in the US doesn't necessarily impact the Chinese EV sector much. In contrast, the European proposed tariffs on Chinese EVs is a lot more significant, because there are a lot more exports of Chinese produced EVs into Europe. But I think one tricky part that many people don't know is that a lot of those exports from China into Europe is European brands themselves. So we need to remember that Mercedes, BMW, Volvo, for example, have massive production, including Tesla. Tesla's largest production facility is in Shanghai, in China. A lot of those cars produced in China gets exported into Europe. So now we are looking at tariffs of anything between 27% to 48%. That's going to be quite impactful on the Chinese EV sector, not necessarily impacting all Chinese companies. We are expecting ongoing negotiations between the parties. We are seeing announcements of Chinese companies like CATL, the largest battery manufacturer, and BYD announcing proposed investments into EU, which will then hopefully soften a lot of the impacts of those tariffs as they produce more domestically within the EU. So all of these things are in development. So I think a lot of it is being managed, a lot of it is noise, but we should see reasonable outcomes for all of those issues.
All right, thanks for clearing that up for us, Tian. Now, before I let you go, this is all happening as Chinese officials meet for the third plenum to discuss solutions around growth and just boosting growth. What do you expect to come out of that meeting, considering the last 3 to 4 plenums that have, 2 to 3 plenums that have happened, have sort of come out with really big reforms that have boosted growth moving forward? So do you expect to see such announcements out of that meeting?
Yeah, so the third plenum historically has always focused on really long-term economic planning rather than policies that stimulate short-term economic changes. So I think we expect more of the same to come out this week. Today was the first day of the third plenum meeting this time. It's going to end on Thursday. Hopefully we see some more supportive long-term economic structural policies that will then continue to fuel China's next round of growth for the next decade or two. What we are probably expecting with a high level of confidence is continued support toward self-sufficiency, especially in the technology sector. We expect policies coming through to hopefully stimulate domestic demand over the long term. But overall, we don't expect too much finer detail in terms of short-term support, but it should be a lot of positive long-term planning policies that come through.
Tian, unfortunately, we have to leave it there. Thanks so much for your time and those insights. That was Head of China Strategy at Prescient, Tian Pan.